Welcome back to Squawk. We have some breaking news that's just coming in right now from the White House that we need to tell you about. It's releasing the details surrounding two COVID-19 vaccination policies. Companies with 100 or more employees are going to have to require workers to be vaccinated or be tested on a weekly basis. Companies will have to provide paid time off for workers to be vaccinated and ensure that unvaccinated workers wear face masks, and workers at health facilities that participate in Medicare and Medicaid will need to be fully vaccinated, Joe. It also appears that the deadline has been pushed back a little bit here as well. So the original deadline was looking at December 8th. Now it's looking like it may get pushed past the holidays here to January 4th. We'll bring you more on this news as we get it. But right now, I want to pivot to talk about the world of gaming, because shares of Take-Two Interactive trading up this morning. Gaming company beating the street with its latest quarterly results, and it's raising its outlook. Joining us right now to discuss the business and Take-Two's role in, yes, the metaverse, Strauss Zelnick, chairman and CEO of Take-Two Interactive. Strauss, it's great to see you. We've been talking about a theme that seems to be emerging in the markets, maybe more than the economy, but you can speak to it, about sort of what were pandemic plays and the acceleration that took place during the pandemic, both in the stock prices of some of these companies and, of course, in the earnings of these companies, and what happens post-pandemic. And you're one of those companies I think straddles and sits right in the middle of it. So what are you seeing?
Well, what I said during the pandemic was we expected post-pandemic demand to be higher than pre-pandemic and lower than during the pandemic, just because people were sheltering at home. And I think that at first turned out to be true. And now, as we reach what appears to be a new normal, demand is actually higher than during the pandemic in certain instances. So in this quarter, for example, we comped well. We were up 3% year over year, and recurrent consumer spending was up 7%. Year over year, we had expected that to decline 11%. So at least we are doing somewhat better than expected, and we're really pleased about that. And I think that reflects the broader interactive entertainment economy as well, as long as you give people what they want, of course.
I mentioned at the top the phrase metaverse, which now may or may not have been commandeered by Mark Zuckerberg, given that he's changed the whole name of the company to Meta. But you've often talked about how you think that your company may have been one of the first to the metaverse's dance, if you will.
Well, look, it all depends how you define it. If you define metaverse as we are going to transition from a physical environment to a digital one in all of our daily activities, I remain pretty skeptical. If you define metaverse as the new version of Second Life, I'm really skeptical. If, however, you describe metaverse as a digital location that we can go to be entertained, to connect with other people, to talk, to play, to drive cars, to engage in criminal activity, to be the police that stops that criminal activity, and you have fun along the way, well, we're already in that business. And I would argue we're probably the biggest metaverse company on earth if you look in terms of revenue and profits, because we're in Grand Theft Auto Online, which really I think defines the metaverse today, Red Dead Online, and NBA 2K's online version. So we're already there. We're really excited. And we see at least one expression of what it means to be a metaverse at our company right now. What the future holds remains to be seen. As I said, I'm skeptical that we're going to wake up in the morning and intentionally sit at home, strap on headsets, and conduct all of our daily activities that way. We had to do that during the pandemic, and we didn't really like it so much.